Hello kind people of YouTube and welcome back to another video. As always today we're gonna take a quick look at the crypto markets before jumping into news, and as you can see we have a lot to get through today, so let's jump into it quickly. Now looking at the markets, we see for the second day in a row now that we seem very much to be stabilizing after the drop from 2 days ago. Today the market cap is once again at around $203 billion US, with 24-hour volume once again at 11 billion and Bitcoin dominance at about 54%, ever so slightly down from the 54.1% it saw yesterday. Some tokens are showing minor recovery, like XRP up 1%, Bitcoin Cash up 1.69% and EOS up 1.73%, but for the most part the markets are moving more or less sideways, so not a lot to talk about here, just gotta acknowledge the state of the markets. Let's jump into some of the articles, shall we? First one is half analysis, half news. Let's read through this on XRP. I know a lot of you are Ripple and XRP fans, so I always try to make sure to include it in my videos somehow. Today I found this article from hacked.com. As always, all the articles that we're talking about in the video will be linked in the description, and you will also find ways to support the channel, my social media pages, an email address where you can ask questions, a bunch of stuff in the description, so do check it out. Ripple released their most recent episode of Ripple Drop, detailing some of the latest updates surrounding the company and providing some education on their products. Separately, an acknowledgement of the solid Q3 report and commentary on the growth of institutional buying was noted. Ripple's SVP of Product Ashish Birla discussed 3 different Ripple products that are available on RippleNet and how they are working together. Ashish gave an explanation on how XVIA connects all products on the RippleNet, such as XRapid and XCurrent. He detailed that transferring payments from the United States to Mexico would become seamless with XVIA. The sender connects directly to XVIA, which is then connected to XRapid. This can be used to transmit the funds to a receiver in Mexico. This will assist in eliminating the requirement of an FTP server. Transaction time is reduced from at least 3 to 5. I think what they mean here is reduced from at least 3 to 5 days to a few minutes or seconds if everything runs the way it's supposed to. Further on, the Director of Product, Craig DeWitt, spoke about the multi-hop feature of RippleNet, explaining that multi-hop gives RippleNet members the ability of transacting with banks, payment providers, or digital wallets that they don't have a direct relationship to. Lastly, of note, the Chief Market Strategist Corey Johnson noted that the largest change in the latest quarter was the chunky amount of buying by Wall Street. Institutional buying directly from the company, an increase of around 400% quarter on quarter for Ripple. This was very encouraging to say the least about investor growth prospects for the company. And if you remember, I made a video the other day about the Q3 report where I also pointed this out as the big takeaway from the report. Institutional investment going up like crazy. Quidax is the latest company to partner up with Ripple. It will be using Ripple's XRapid product, facilitating money transfers and settlements with the use of XRP. Quidax is an African cryptocurrency exchange. The digital tokens available on their platform currently are Bitcoin Cash, Bitcoin Gold, XRP, Bitcoin and Litecoin. So here we have a new XRapid partner. One of the things a lot of us have been waiting for, more companies to partner with XRapid. Important to keep in mind here, this is a cryptocurrency exchange. So this will likely be used to facilitate liquidity, but is not in itself a bank or a payment corridor. But with them getting this African cryptocurrency exchange on board, that means they seem to be in discussion with African banks to open payment corridors to the continent, which might be using Quidax as their liquidity platform. The standard technical bull flag setup is still very much in play. This is true despite the cooling of late for XRP US dollar over the past few sessions. The price managed to bounce on Tuesday after downside intensity hit the market on Monday. Nevertheless, price action continues to bounce within the flag pattern, subject to an extended breakout north. Key near-term levels to keep aware for XRP US dollar ahead of its next committed direction are as follows. In terms of support, the price is currently trading within a demand area that tracks from 45 to 43 cents. Further south, eyes will be on the lower trend line of the flag holding up 43 cents. Therefore, any break lower could send the price falling fast down to sub 40 cents. Finally, to the upside, resistance is seen not far ahead around 45.5 to 46. the above trend line for the mentioned pattern. Should buys gather enough momentum, ICE will be on supply seen at 49 cents ahead of the big psychological 50-cent mark. Given the current set of price behavior, the odds appear to be stacked in the bull's favor. So this analysis here, you see the graphic here with some of the lines drawn in, very much in favor of a bullish sentiment despite the prices falling in the last couple of weeks after they picked up significantly for a couple of weeks before that. In this analysis, still very much a bull pattern, but the important things to talk about here are the statements by Ripple staff and the new partnership with Quedax that, to my knowledge, there has been no XRP use, at least through XRapid, in Africa so far. So this has to mean that at least one African bank is on track to use XRapid and just hasn't been announced yet, so we should hear a lot more there in the near future, and this is looking very good once again for Ripple and for XRP. Continuing on. Full disclosure before we get into this article, I have a Ledger affiliate link in the description, meaning if you want to buy one of their products and you do it through that link, I get a small cut of the profits. So I'm not completely unbiased when talking about Ledger, but I felt this article was of note regardless, so just keep in mind here giving disclosure. Ledger, the hardware cryptocurrency wallet maker, plans to add support soon for more stablecoins, including expanding Tether usability across all its products and services, executives said. Currently, the company supports Tether for its two handheld storage products, the Ledger Nano and Ledger Blue, but it intends to add the US dollar-linked cryptocurrency to its institutional vault service. Despite Tether's recent loss of parity with the dollar amid renewed questions about its issuers' reserves, Benjamin Song, Ledger's new head of operations for the Asia-Pacific region, said the token remains popular there. One thing that is slightly unique in China and South Korea is the demand for Tether, said Song, an alumnus of S&P Global Market Intelligence and Deloitte, whose hiring Ledger announced Wednesday, since both of these countries have capital controls in terms of your ability to move currency out of the country. According to Song, who is opening the Paris-based Ledger's first Asia office in Hong Kong, Chinese and South Korean investors are often more comfortable with fiat-pegged currencies or assets that reflect traditional capital markets. Even after it broke the bucket 2 weeks ago, a demand for Tether continues to dominate trading pairs on Asian exchanges like Huobi, where CoinMarketCap shows the volume is up nearly 26% in a single 24-hour period last week. The important takeaway here, the article continues, and you can of course read it if you click through the link in the description. Important takeaways here are twofold. A big new hire for Ledger is Song, who previously worked with S&P Global Market Intelligence, to open an office in Hong Kong and expand significantly in the Asian market, and that they are going harder on their support for stablecoins, including, despite recent news and recent doubt around it, Tether. Now, this was likely in the works long before the Tether price lost parity with the US dollar, so it makes sense that they wouldn't scrap the plans for that over that. But it's still surprising at this moment to hear any large crypto company come out in such outspoken support for Tether, but it seems to be driven very much by market demands from Asia here. Continuing on, I'm gonna try to get through these stories relatively quickly today because we have so many. Big Four auditor EY launches zero-knowledge system for private transactions on Ethereum. Now, if you've been keeping up with privacy coins, you know that zero-knowledge systems are pretty much the thing that they are aiming for. That is pretty much the mark of a private coin. Ethereum previously not considered one, but it might be able to function as one in the future with this new tech solution. Big Four auditor Ernst & Young has launched the prototype of a system that enables secure and private transactions to take place on the Ethereum public network, according to a press release from October 30th. The system, dubbed EY Ops Chain Public Edition (PE), uses zero-knowledge proofs technology and alternative algorithm for authenticating distributed ledger entries in which transacting parties provide proof of validity, but all other information remains encrypted, including their identities. The prototype is aimed at enterprises that wish to keep their transaction records private without having to resort to a permissioned private network. Paul Brody, EY's global innovation leader, blockchain, I guess that is part of his title, I got a bit confused here for a moment, has outlined that with zero-knowledge proofs, organizations can transact on the same network as their competition in complete privacy and without giving up the security of the public Ethereum blockchain. The press release underscores that the $20 billion plus market cap Ethereum network offers enterprises a level of liquidity that dwarfs that of any existing permissioned blockchain, as well as removing the need for building an in-house private blockchain from scratch. EY says it aims to spur enterprise blockchain adoption by supporting both payment tokens and unique product and service tokens that are similar to the Ethereum ERC20 and ERC721 token standards. Its offering extends to a prototype for a private transaction monitor that captures transaction history for subsequent review. Both EY Opschain PE and the EY Blockchain Private Transaction Monitor have reportedly been developed by EY Blockchain Labs in London and Paris and are still with patents pending. They are slated to be ready for full-scale product launch by 2019, the press release states. Ethereum's developers have long been working to support zero-knowledge proofs on the network, with Vitalik revealing in fall of 2017 that a network upgrade had successfully verified a zero-knowledge snark proof on the Dopson testnet. Earlier this month, Dutch multinational banking and financial services corporation ING announced the release of its own more generalized open-source blockchain tool dubbed Zero Knowledge Set Membership, which also aims to enable the validation of data on a blockchain with increased privacy. Also this month, Ernst & Young released a Stark report that analyzed data for the top initial coin offerings that raised capital in 2017, concluding they had done little to inspire confidence 1 year on. So we see here in the latest in a lot of development happening on top of Ethereum's technology to add additional capacities to the Ethereum blockchain. This is very, very promising, though it is very much aimed at enterprises right now, not at private use. This is not meant for private people to keep their transactions private, but for large corporations to prevent corporate espionage, essentially. But still, making this work on the top of Ethereum, which we have known for a year that it was possible, but I think this is the first legitimate project that is planning to actually launch for commercial use. So this is very, very interesting and could give Ethereum a bit of an edge against more dedicated privacy coins. Bank of America adds private key storage filing to stockpile of blockchain patents. At this point, it's almost a running gag that Bank of America pretty much announces a new blockchain patent every week, and this is the latest. Bank of America has gained a further cryptocurrency-related patent, a filing confirmed October 30th, continuing its efforts to be prepared for the industry's future growth. The latest award, which adds to the bank's mounting stack of cryptocurrency and blockchain patents, references storage methods for private keys. Specifically, the filing reads, "Current opportunities for ensuring private keys remain untampered with are insufficient." While many devices may provide for acquiring evidence of a security breach, such devices do not provide for real-time response to such breaches, such that misappropriation of private cryptographic keys is prevented, Bank of America writes. The patent filing continues. Therefore, a need exists for a secure means for storing private cryptographic keys. The desired storage means should reduce the risk of misappropriation of keys due to the keys being stored internally within a computing node that is frequently or in some instances continuously accessible via a public communication network such as the internet. So this is the latest in a long line of cryptography of blockchain patents filed by Bank of America. They are really going hard on this. They want to make sure they have all the future-ready technology in case cryptocurrency takes over in a way that Bank of America can't ignore them anymore. I think what we're going to see if cryptocurrency becomes mainstream in the coming years is that out of American major banks, Bank of America is almost certainly going to be the first one to fully integrate cryptocurrency into its traditional finance products. It will probably start offering bank accounts with cryptocurrency capabilities not that far in the future. Just seeing how many patents they have and how many different technologies they have invested a lot of money in. Of course, they are going to want to make money off all these patents, and some of that could be preemptive patent filing, so they have all of these technologies when other companies want to use them that they have to give Bank of America a fee. But my thinking is that a lot of this is probably for internal use that they are planning to integrate in products at some point. So we will see what happens with all of their patents. Some more negative news out of India. India is considering a ban on the use of cryptocurrencies. Now, India is one of those countries that has been a lot more negative about crypto. We have seen this from a few Asian countries in particular. After months of public uncertainty brought on by years of deliberation by the Indian government, authorities have discussed the framework to legally ban the usage of private cryptocurrencies like Bitcoin. In the 19th meeting of the Financial Stability and Development Council, headed by India's Finance Minister Arun Jaitley on Tuesday, I probably mispronounced it, I'm very sorry, the subject of cryptocurrencies took the floor. According to a release by the Indian government's Ministry of Finance through the Press Information Bureau, the working group deliberated on the issues and challenges of cryptocurrency in the country. Pointedly, an intergovernmental committee tasked to study and propose a legal framework for cryptocurrencies has, instead, suggested a ban on using cryptocurrencies in India. The full excerpt from the press release reads, "The Council also deliberated on the issues and challenges of crypto assets currency and was briefed about the deliberations in the high-level committee chaired by the Secretary to devise an appropriate legal framework to ban use of private cryptocurrencies in India and encouraging the use of distributed ledger technology as announced in the budget for 2018-2019. It's crucial to note the phrasing used in the public release here. Enforcing a legal framework to ban the use of cryptocurrencies could extend to trading and its application as a payment instrument, but not necessarily owning cryptocurrencies." As domestic industry source Crypto Cannoon, which has been following the entire saga, reports, Mr. Garg briefed FSDC Council on deliberations in the high-level committee to devise an appropriate legal framework to ban use of private cryptocurrencies in India. Does the above said indicate that the possession and trading of crypto are going to be permitted? Be positive. The domestic cryptocurrency trading has already been largely nullified as a result of the banking ban enforced by the central bank in April, leading to the shuttering of at least one major Indian exchange recently. So this is continuing to look very negative in India. Now, you might wonder, why do we care what happens in India? First of all, India is a large country with a lot of people. I'm actually unsure if they have over 1 billion, but they have hundreds of millions of people living in India, one of the largest countries in the world. And such a large country being so negative on crypto does have ripple effects. It does have influence on the global markets. Now, we knew not to expect anything positive here for a while, but this is probably a bit more negative than even a lot of people who have been following this closely thought we would get. Now, I am hopeful that at least owning cryptocurrencies will remain legal, and we have seen something similar in China, where the use of cryptocurrencies is on murky grounds, but it has recently been verified that owning cryptocurrencies is perfectly legal, and that they are fully considered property, which is of course legally important. They can't sue you for owning cryptocurrency. Well, they wouldn't be suing you, but they can't fine you or take you to court. And they can't, and if someone steals your cryptocurrency or defrauds you out of them, you can take those people to court. If cryptocurrency wasn't considered property, that would not be possible. Now it remains to be seen if India considers cryptocurrencies property and if the ownership of them will continue to be legal, but at least for all kinds of use of trading, this seems very negative. I am still waiting for more information. Like this article itself says, this is a developing story and not all the information has come in yet. How exactly we should interpret this statement is still out for grabs. We haven't quite decided that yet. Or rather, it's not something we can decide. We haven't quite figured that out yet. We need some more clarification in the future. Now, ending this video, one more story. Ron Paul, of course, a famous libertarian, probably one of the most influential libertarians in America. Now, you might wonder why I'm directly on his website here. I initially had an article from a crypto news page open that reported on his statements, but I figured why not read his actual blog entry itself, because that is where his statements are coming from. And he is here talking about the Fed, and he brings up cryptocurrency at one point in this blog post. Now, before I read this, I just want to clarify once again that I don't want this channel to be political, so I'm going to refrain from making any statement either way about what I personally think about Ron Paul's politics or the party he stands for or American politics in general. And I would like for the discussion of this to focus on his statements here and not on his political stances. I would very much like if you guys also followed that here. I want to unlink cryptocurrency from politics as much as I can. I think this is a bipartisan issue that we should all be able to get behind cryptocurrencies. I think that this is a revolution in technology. So I don't want this channel to become political. I want this channel to be about news concerning crypto, about analysis concerning crypto, about the future potential of crypto, and not about any other political issues. So just wanted to get this out here. Let's read this, and we're going to refrain from talking about anything that doesn't actually have to do with crypto, but I am going to read the whole thing because it's not that long. President Trump recently called the Federal Reserve's interest rate hikes crazy. Leaving aside President Trump's specific complaint, which is likely motivated by the belief that low rates will help him win re-election, he is right that crazy is a good way to describe the Federal Reserve. When not forced to use a government-created currency, individuals have historically chosen to use a precious metal such as gold or silver as money. The reasons include that precious metals are durable and their value tends to remain relatively stable over time. A stable currency ensures that prices accurately convey the true value of goods and services. A main value of a precious metal is it accurately conveys the true price of money, which is the interest rate. If the interest rate reflects the manipulation of central bankers and not true market conditions, individuals will be unable to properly allocate resources between savings and current consumption. In contrast to market money, government-created fiat currency is anything but stable. Central banks constantly increase and decrease the money supply in an attempt to control the economy by controlling the interest rates. This causes individuals to misread market conditions, leading to a misallocation of resources. This can create an illusion of prosperity, but eventually reality catches up to the Federal Reserve created fantasies. When that happens, there's a recession or worse, leading the Fed to start the whole boom and bust cycle over again. When central banks create money, those who first get the new money enjoy an increase in purchasing power before the new money causes a real increase in prices. Those who receive the money first are members of the banking and financial elite. By the time the new money reaches the middle class and working class, inflation has set in, so any gain in purchasing power is more than offset by the increase in inflation. Thus, central banking causes income inequality. Since the Federal Reserve's creation in 1913, the dollar has lost most of its value. The steady erosion of the dollar's value punishes savers and rewards those who seek instant gratification, even if it requires piling up massive debts. So the Federal Reserve is at least partially to blame for the rise of a culture that devalues thrift. The very act of creating money and manipulating interest rates distorts the market. Therefore, the Federal Reserve system cannot be fixed with a rules-based monetary policy or even with tying the Fed-created money supply to the price of gold. It is amazing how many economists who oppose price controls on all other goods support allowing a secretive central bank to control the price of money. Trusting the Federal Reserve to produce permanent prosperity instead of a boom and bust cycle is a textbook example of a popular definition of insanity being repeating the same action in hope of getting different results. The Federal Reserve system is as unworkable and doomed to failure as every other form of central planning. It is likely that the next Fed-created recession will come sooner rather than later. This could be the major catastrophe that leads to the end of fiat currency. The only way to avoid crisis is to force Congress to end our monetary madness. The first steps are passing the Audit the Fed bill, allowing people to use alternative currencies, and exempting all transactions in precious metals and cryptocurrencies from capital gains taxes and other taxes. So the major takeaway here is that Ron Paul is coming out strongly in favor of a bill that allows the use of alternative currencies and, most importantly, exempts all cryptocurrency from capital gains taxes. This would of course be huge for people invested in cryptocurrencies. Capital gains can be very high, and if cryptocurrencies were to be excluded from capital gains, that would be very welcome to a lot of crypto investors. The bigger issue here, of course, is that this is a rejection of the federal bank in general, which he sees as creating both income inequality and these boom and bust cycles that some people are arguing we are already in a new crash. To me, I'm not quite sure if we're quite in one yet, but it looks like we might have one coming soon. So 10 years after the last one, it seems about time. And a lot of people think that cryptocurrencies might be the solution. So what he thinks here is the next recession, which may or may not already be starting now, could lead to the end of fiat currency and crypto could rise from the ashes if the American government doesn't hinder the growth, the prosperity of cryptocurrencies. So we see here an influential political figure coming out very much strongly in favor of crypto. of allowing crypto to operate relatively untaxed, of crypto possibly being the solution for the issues the Fed creates and to the next recession. Let's see what will actually happen when the recession comes, but I thought this was very much newsworthy, whatever you think about Ron Paul or the party and ideology he represents in general. Now, this isn't the first time Ron Paul is in the news for talking about crypto. I found this older article here, 20th December 2017, where he accurately described Bitcoin as a bubble. Let's read this as well, and then I'm gonna let you guys go for today. He's taking on President Donald Trump and the Federal Reserve. Now, Libertarian former Congressman Ron Paul is taking on Bitcoin. According to Paul, cryptocurrencies have become an asset that rivals the bubble he sees in stocks. I think it's going to continue to do exactly what it's doing. It's going higher and it's going lower, he said on CNBC's Futures Now. We can look at what's happening now, which to me is a climatic end of QEs. Paul, who has done commercials touting currency competition for a company that benefits from Bitcoin's rise, views the crypto craze as a side effect of central banks doing several rounds of quantitative easing to cope with the last financial crisis. I look at the problems we face, I think they are gigantic and people are desperate and looking everywhere. Why would they buy bonds that pay negative interest rates? Why would they buy stocks and say, well, this time it's different, asked Paul. Cryptocurrency is a reflection of the disaster of the monetary dollar system. Paul, who's also a medical doctor and former Republican presidential candidate, argues that cryptocurrencies are in an exponential bubble where trying to calculate its real value is extremely difficult. Bitcoin, the largest of the cryptocurrencies, has been trading above $17,000. He hasn't been able to pinpoint when a plunge could happen in cryptocurrencies or the stock market, but Paul says the danger is real. They are both big bubbles in the sense that it occurred because there was excessive credit, but if you look at the curves, I think that the cryptocurrency curve looks more threatening, Paul said. And two things to say here. First of all, he was of course correct that what we saw in late 2017, early 2018 was a bubble, and just weeks after this article, the bubble did deflate. Now, of course, there is a difference between saying that cryptocurrencies as a whole are a bubble and that cryptocurrencies in 2017 were in a bubble. And I think what he was saying here is not that cryptocurrencies are a bubble as a whole, but that the market movements we saw in 2017 were a bubble in which we couldn't actually verify the actual value of these tokens. But his position appears to be very much the same. A lot of people have been saying he switched positions, that he was negative against cryptocurrency in 2017 and that he now supports it. I think he has been pretty neutral towards cryptocurrencies in both these stances. And the only difference is that in 2017 he correctly saw that a bubble was happening, and that now he still sees, now that the Bitcoin and cryptocurrency bubble has deflated, he sees the continuing bubble in the stock market that may or may not be crashing now, but now he realizes cryptocurrencies as a potential future of money, and that regardless of what you think about his ideas or whether you think he is right here, I think that is a very entertaining, entertaining is not the right word, very exciting idea. And with this, I'm gonna end today's video. As always, thank you so much for watching. If you want to read any of these articles, they are linked in the description. Make sure to subscribe if you haven't subscribed already. I do these videos every single day. If you really like my videos, there are ways to support me in the description, including a Patreon, where you can support me with a small monthly donation, and that is super appreciated. And my social media links are also in the description. Thank you guys so much for watching, and I'll talk to you guys tomorrow.